Yes, Paul.
I think from a VC point of view, we try, if it's possible, to put enough money in place to have a run rate of, let's say, 1.5 years or 2 years, so that the management can really work towards the next milestones. We also prefer to work in syndicate. I mean, building a company you will need a lot of money for that, and even although we have a scale of 100 million euro fund, we are not strong enough to build the company through the full life cycle. So we like to work together with other VCs, 2 or 3 together, so that for the follow-on rounds that we can go very quickly, so that the management time or the time management has to spend for fundraising can be limited.
Yeah,
and especially in the cases where the developments are very positively, I think it's better to have some shareholders or some VC shareholders who just put the money on table, so that the management do not have to spend time in running around for money. So that's a little bit our view on these kind of things. What we also experience is that the business angels, that they want to exit when a VC comes in. And this sometimes gives some problems because they have some expectations on valuations. And in most cases, venture capitalists, they don't want to pay out existing shareholders.
No.
But we have, personally at Capricorn, we have changed our strategy to that. We are willing to provide some of the shareholders some exits, because we don't want to have too much discussions at shareholders level or at board level with investors who do not support the company anymore and for other reasons would like to exit.
Okay, yeah. Before we leave this part of the discussion, I would like you in the audience to take part and ask questions. Do you have any questions for these guys related to evaluations, percentages, holding, ownership, anything like that? And if not, we will continue. Yes? We have to warm you up. Next part is we're all here to find either to find funding or make an investment. And funding is obviously something that's been tougher the last year when the economy have been a little bit down, and we also saw from the statistics that we cannot be sure that it's actually growing, but it may level out with 2008 in terms of clean tech investments. Lassi, do you think that this is sort of changing now and we will see a takeoff again?
Takeoff in
more investments, easier to attract capital?
Well, I think it's funny that, you know, it always takes everybody by surprise when you know the fact shows up that economy is cyclical, and it's like, you know, big news, and you know, it's impossible to predict the future, but you know, there's always been better times after worse times.
Correct.
And I doubt that this will be no different. So
no.
So yes, I would expect situation to get better.
After rain comes sun.
Yeah.
Okay. Eric, I believe that you at Midsummer, you have raised more than 3 million euros so far.
Actually, we got a press release today that we got additional 5 million euros.
Okay, so it's done as well.
Swedish and
yeah. So, Eric, I believe you have raised a lot of money to Midsummer, of which about 1 million euro was coming from EU grants, which typically takes some effort to just the application form, etc. With in hindsight or with the result, do you believe it's worthwhile, all this effort to get that money, or what would your recommendation be for other entrepreneurs?
I think it depends on the situation you're in, if you really need them or not. For us, it was our first money we raised, actually, and it meant everything for us. With the help of the quality mark you get from EU, we were able to raise money from angel investors. So it was hard work, but on the other hand, that was the beginning of our company in one sense. So we had no money and we had no machinery yet when I wrote that EU application. So of course it was worth it in that sense.
Yeah.
If you would ask me today if I would make one more application to get more money, I would not do it in the situation I'm now. Then
you don't need to
no,
do it.
it's much easier to work with Swedish government funding agencies, and they are. It's easier to understand and communicate with them, and it's not this immense paperwork that you have in EU. So.
Another topic we talked about is whether it should be a relay of investors, some early investors, and then they make their exit, and there we would have a different category of investors who will actually buy out the first. And Paul touched about it, but I would like to ask Anders, do you typically want to clean the table and allow the angel investors to make their exit? Or would you rather make sure that all the money goes into the operation of the company itself?
We prefer not to buy out the old owners. You have always a valuation issue, but sometimes it happens that you give a little money back to the old shareholders, but not completely buy them out.
No.
We think there is, normally when you get in and after an angel investor, it's still very early stage. So most of the risks are still in place. So we rather prefer to see them stay on.
Yeah, because you enter quite early anyhow, so
Yeah.
you wouldn't say that they've done their part.
Perhaps they have done their part, and there is a problem which we were raised here. If you have 40, 50, 60 angel investors and suddenly you come with institutional capital, and we've had problems with that. One investor suddenly said no to a new shareholders agreement, and you have management spends weeks and months to sort this out. So it's really inefficient time use, but on the other hand, it's not the way you should get paid out by blackmail. So it's rather, so we are hesitant by this experience to go into investments where there are a lot of angel investors. Handful, okay, but 50 or 40, there has to be a very specific agreements around that, otherwise we try to keep away.
Mike, do you have any comments to that, or would you just agree with Anders that it would be the similar situation in the US?
Yeah, to some extent. I definitely have a few comments. I mean, one is, I think, the risk for a lot of angel investors is you do come in early, followed by the VCs, and the VCs don't want to buy you out. They want you to stay at the table. On the other hand, you know, you do need to sort of keep sort of paying to play. And so for an angel investor, it could be difficult to write check after check, round after round to maintain your percentage, or you do get washed out. So I think that's one of the risks for angels is you put your money in early, but then it gets very expensive to sort of stay in the game. And then another thing I've seen in terms of angel investors has become very common in Silicon Valley is angels come in, and when they put money in the company, they don't get equity. It's done on a note, a convertible note. And the terms of the note are that the note will basically convert at the same terms as the VC round that's going to happen in the future, with some additional warrant coverage to, you know, give the angel a little kicker for getting in early. And those deals are usually pretty clean, because then the VC feels, okay, it's great. They're getting the same terms I did. You have to worry about setting price in that earlier sort of financing. And we've seen that has worked fairly well in the Valley. That's almost pretty common now that most angels come in on notes, and that gets rolled into the VC rounds when it happens.
Yeah. Right. Well, thank you. And Lasse, you had some comment to that.
Just a comment that I've looked at these things as an investor and as an entrepreneur, and I think that, you know, at the end of the day, the investors have all the aces in their hands in these discussions, and that's just how the dynamics work, and maybe some sort of an entrepreneur ombudsman would be needed. Sweden would be a good place to start.
Yeah.
But that's the power game.
That is true.
Yeah.
Yes. Especially if you enter in a situation where you are actually running out of money.
Yeah.
Then your aces are gone. True. We talked. Are there any angel investors in the audience? Do you have a question about this? When should the angel be able to leave, or what would their expectation on the VC be? No angel investors, or no question.